forward. So let's look at that. Already coming off it in the Aussie. Again, anytime you want confirmation, I don't like seeing that. But finishing off the Aussie, because I have a rather large position in the Aussie right now, and I'm assuming some other people are in this trade with me as well. Just don't forget we could potentially come all the way halfway back, and any sell-off would be quick and dirty, just like this one. But it would come off the lows and bring us. We are looking for the potential for new highs. Oh, I'm sorry, we didn't even do the S&P 500. This is the most important market of all right now. All right, so on a 15-minute time frame, we rallied off lows from yesterday. A nice sell-off into the close. End of month. I usually forget this, but at the end of the month, the SPOOs have a tendency to do this big whipsaw move, and they did that. So anyway, we do have an open gap at the 83 or 63s. We're not anticipating a gap fill there at all. And there is also the gap from today, which comes in at the 72 quarters. Oh boy. So if we do sell off, we're in, look for a gap fill. It is a Friday, so there is potential that we sell off. And there's the potential that if we get up to 82 quarters that we will never see this gap and we'll just rally higher. We'll see what happens. On a longer term time frame though, let's go to our daily chart on the SPOOs. And I do not want options on. Give it a sec here. Okay, beautiful. So on the S&P 500, from 800 even, I'm marking 800 for a reason. But so off of our 666 lows, we held a long-term setup with 1,900 targets. Off the lows, we started a series of extensions. Those extensions had an 800 anchor and traded once to target. This trade actually blew through target. All right, and when a trade blows through target, it starts new extensions. Those extensions started, traded once, twice, 3 times, 4 times to target. That was back in 2009. They hit their targets. Flash crash happened. Same anchor new high. Broke on the day of the flash crash. Right? Day of the flash crash, or I'm sorry, it held the 61.8 on the flash crash. A few days later, after the flash crash, we broke it. Once it was broken, the first measured move short since the lows pretty much held. There was one measured move short here that held, but a daily measured move short that held. But otherwise, first measured move short. Everybody see that how the rally off the lows post the flash crash held a 50% short and went to targets. Magic voodoo. Now, what's important to remember here is that those target lows, they didn't quite get to their targets. They were defended 7 points above by the same anchor new high from this original extension. Okay? Held right at the 50 at the 1,000 level. Now, it's important to notice that after this trade had a completed target, the market failed out of both the all the way halfway back short, failed out in September, but the next in the series of measured moves failed out in July. We traded the halfway back short, and it failed out. The reason I'm pointing out this pattern is because the same thing happened in our sell-off in 2011. and we'll show you it in 1 second, what we're anticipating going forward. Uh-oh, getting some hang here. Okay. So now we had a dirty pullback. Trades blew through targets. And from your July tops to highs, we started a series of extensions that traded once, twice, 3 times, failed out. After it failed, dropped the first halfway back short. Those are the 22 or 12, 20, 24s. I remember those like it was yesterday. That short setup. The market sold off. It was unable to puncture and break down to new lows because same anchor, new high from the 800 anchor. Oh, I forgot to mention. 1315s. Targets were hit from the 1000s. Same anchor, new high, boom. 1085s come in as support. Market picks up off these levels. We break the short at 1258s in November. Immediately drop the first long. It fails to have a daily close below its 61.8. It goes down, dips a couple ticks under, and rallies off. We have now hit those targets at 1340s. There was another long that held after that has also hit its targets. We've blown through both sets of targets now. And if this market continues much higher, we can justify extensions off of either one of these highs, just like the high in 2010, that any major pullback, this pullback was seen at prior highs after a rally through them. If we don't bust through highs and we do get a substantial pullback, we're going to use either one of these poles. And by substantial pullback, I do mean down, 50 points lower to 1325 or 1337s. We're going to have big daily buy levels, and those are big swing trades. Now, of course, I'm not entirely anticipating that just yet. So let me show you what we're holding on an hourly time frame for the S&P 500. Drawings, delete drawings, all drawings. We are actually holding an anchor from another top right now. So we had a series of extensions, and I'm not going to go through all of them, but from the 29.75 highs, we had a gap up on February 17th, came down, traded, entry to target at 78s, hit. Same anchor, new high, was front run. So we do, the scary thing is right now is you do kind of have the potential we could fall back and trade this anchor and then go to targets. However, there's also the idea that we may have just held a measure move long here, same anchor, new high here, traded. Or it could have been an extension off that high. Needless to say, today we held a long setup, not once but twice, and we certainly have a series of longs that have the potential to take us up to new highs here. So we're going to see what happens, but we are in long setups until they fail now, particularly an extension long that has now maybe constituted hit its target. We'll see what happens here, but I know a lot of people have been selling this market. Look at a 15-minute chart again. I mean, we have nice. Need a little more time on this. We have basically in this top a week of stops that have been building for the shorts. And so when we do finally get up there to this top, it's going to, not only that, but we have potentially stops from the prior highs. And nevertheless, buy the dips. We'll see what happens here, but we are above the gap. It's a 72 gap, and if this market can continue to rally and get above tomorrow morning, get above the 82s, we're going to consider this market in a gap and go situation, and it will just rally and rally and rally. Okay, so that's all I have for you. If we do sell off, we're looking for support. Honestly, down support at the gap fill in the morning. Oh man, I'm terrible at this. Or overnight. It doesn't just have to be in the morning. Overnight at the 72s, we're looking for if this market does sell off, we're going to hold these down here at the low 50s again. And we are still looking for same anchor, new high. From that 800 anchor to highs. 800 anchor to new highs. 1 sec, sorry. We are looking for that 1500 target above eventually. So we could potentially have a pullback here. We want to just see this market go straight up. If not, we know where support lies, but the trend is still up. The trend will remain up basically while we're above 1300. So we've got 75 points at least of buffer room before any substantial shorting should be taking place. So don't fight the trend, just hop on board, and I will be back with you guys as price action develops. I'd like to point out this so far today. So far this candle looks very bullish. It is an inside candle. The candle, well, now we're in an outside candle here, but this is looking, we had a big sell-off, close, rally, and not too much longer until we get to new highs here. And this could be, to me, this candle setup, good other there's not going to be a good one to show you, but anyway, we're in a doji in our current candle for today, so we'll see what happens. But it's there's a substantial decision in the market that needs to be made right now, and we're either going to sell off or we're going to rally really, really hard. I favor the rally, just because we're in a long trend. So, all right, everybody, have a great night. I will be back with you as price action develops.